Well, Canada's major banks have made their latest prime rate cut, sitting now at 3%. But given where our economy sits right now, more rate cuts are not such a sure thing.
So joining us live this morning is Janine Ewell, licensed mortgage agent and mortgages by Janine. So Janine, appreciate you being here this morning. The Bank of Canada overnight lending rate is down to 3%.
Yes.
Right.
Correct.
After 6 consecutive rate cuts here.
Correct.
So we went up. Now we're starting to come back down, perhaps not as quickly here. Mm-hmm. What is that doing to the mortgage market? Because if people are in the market right now to either buy or renew, what are you seeing in terms of where they're going or what kind of advice you're giving to your clients?
Well, and I think now more than ever, advice that is personally tailored to each client situation has probably never been more important. There's not a one-size-fits-all solution. Some people are going to look to fixed. Some people are going to look to variable. I'm seeing a pretty even mix right in the current environment. That being said, that may change after yesterday's commentary from the Bank of Canada.
Yeah.
I don't think anyone in the industry was all that surprised that they cut by a quarter point. We pretty much knew that was on the horizon. What we didn't know exactly was what the commentary was going to look like. And the commentary suggested we don't know whether there's going to be any more cuts. Probably. The markets are pricing in maybe 1-2 more cuts still this year, but there's an inordinate amount of uncertainty around that, what that's actually going to look like. And for that reason, there are going to be people who are going to choose a fixed rate in this season just for the stability that does provide.
Right.
There is still a great case to be made long-term for considering a variable rate mortgage, but we just don't know exactly how many more cuts we have on the horizon. And for that reason, making sure that your situation and the person you're working with is talking specifically to you and what your financial picture looks like has probably never been more important.
Yeah.
Right. And we're just kind of 2 days away from finding out whether or not this 25% tariff threat is real. And of course, that's lending a lot of uncertainty, but also uncertainty for what interest rates will look like next season, right?
Correct. Yes. And that's exactly it. I don't think anyone knows. We probably have, unfortunately, less insight than we've ever had. I did, in preparation for this morning, I read everything I could get my hands on. And I do my best to keep my finger on the pulse. But I don't think anyone knows. We haven't been in a situation like this where, we finally got inflation under control, but tariffs obviously do have that that inflationary potential impact. But then also, as we were hearing this morning, you can also find yourself in a situation of stagflation if, in fact, we have a pullback in GDP and then also inflation. So the Bank of Canada, they're in a bit of a sticky spot. They have to make sure that they make the right moves. We just don't know exactly what those are going to be.
Let me just slide this quick last question in for you, Janine. A lot of people are saying, well, I'm seeing the variable rates come down. Why am I not seeing fixed rates come down at this point?
I think that is probably, in this last season, that's probably the question I've been asked more than almost anything. It is because largely fixed rate mortgages are related to bond yields.
Yeah.
So when bond yields come down, then fixed rate mortgages also come down. But we don't, unlike variable rate mortgages where you're either going down or up, we don't always see bond yields fall in a linear fashion. Often they'll kind of fall in a slightly more, a little bit, like there'll be blips. When we received news that Trump had been elected, bond yields spiked pretty considerably, and a lot of mortgage lenders actually temporarily pushed rates up.
Right.
We've seen, unfortunately, that come down in this last little while again, and hopefully will continue to trend down, but it's really anyone's guess. So best thing I can say, if there's any one piece of advice to take away today, if you're in the market planning to buy and shop for a house this spring, get a rate hold in place. Make sure you have a 120-day. That will take you all the way to the end of May. Make sure you have a rate hold in place, whether it's fixed or variable discount. That will give you at least the confidence to know that you're shopping in, and knowing what your budget.
Exactly.
What you're going to be spending monthly.
Yeah, lock down the security and knowing.
Exactly. That's right. That's
a
huge peace of mind for a lot of people these days.
Okay, licensed mortgage agent Janine Ewell, thanks so much for joining us. Appreciate your advice.
Thank you.
Thanks for having me this morning. Thank you so much.